Good morning. For Traders Exclusive, this is George Kachuk, we're RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. What I'd like to talk about is the equity markets. The equity markets continue to grind higher. And what I'd like to talk about a little bit is about the psychology of the market. And what I'm referring to is, over the last, during the summer, over the last few weeks, we started getting some few bouts of selling, and everyone was concerned that the valuations are stretched. Interest rates will go up, and the market's going to, it can't keep going up forever, and so forth, so forth, so forth. However, funny thing happened. A lot of stocks on earnings started to break out, and they started to break out into new highs. So what I'm referring to is when I talk about the psychology of the market, you have to take a look at some of the leading stocks like Amazon and Google, for instance, who had severe resistance at the $1,000 level, and it just blasted through that level and are holding that up. That tells you that the risk is on. And it has nothing to do with valuations, it has nothing to do with quantitative easing or the Fed or what's going on, but it's telling you that the market, it's an auction place and there's demand for shares of stocks. And not until that falters, this market's probably going to continue to go higher. Similarly, we can see that in another group of stocks, what I would call the second tier, sort of like risk-on stocks. Those are some of the semiconductor stocks, stocks like NVIDIA or Lam Research, also had resistance at $200 level, and they're able to break through. We saw the same with Arista Networks last week. On their earnings, broke through the $200 level. All these kind of like round numbers tend to be psychological levels. You see that in some smaller cap stocks. For instance, at a $50 maybe a psychological level. And then we saw stocks like First Solar, FSLR break through that level. Stocks like Emzor Robotics, MZOR, struggled below the $50 level, broke through there. Or Altasian, symbol TEAM, software stock that I've talked about weeks before, broke through the $50 level, is holding above that level. So these things are very important. And even the $100 level, as stocks like Salesforce had a resistance of $100, finally broke through that $100 level. So you can look at the general indices, and you may see some selling here or there, but if you want to get a better gauge of the market, it's a good time to take a look, step back, take a look, what happened at earnings, what levels did a lot of different stocks break through, and that may tell you something about the nature of this market. For instance, after a lot of earnings, there were a lot of huge gaps. Stocks gapped up. And what's that telling you? It's telling you the market completely mispriced what that stock was possibly worth, and everyone jumped in, buy up the stock, and it continued higher and it continued to hold. So as long as all those gaps and all these psychological levels continue to hold, it's probably telling us that the market's going to go a little bit higher. Now, I would be concerned if all of a sudden I started to see breakdown of aforementioned stocks at those levels. Then indeed we might start going in a correction. But until then, we're still going to go higher. So as I always said, let price and volume be your guide. And this is what I'm talking about. And this is just psychology of the market operating. It's an auction place. There's a demand for shares. And until that demand changes, we're probably going to go a little higher. So as always, let price and volume be your guide. This is George Kachuk. We're RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. And you have a great trading week.